Something very serious just came out of the Trump-Xi summit talks, and you are not going to want to miss this. This just came out, and people are reaching out about this in record numbers right now, asking what these summit talks mean for their retirement savings, their investment accounts, their Social Security payments, and the overall financial stability they have spent a lifetime working to build and protect. There are multiple developments breaking simultaneously right now. And if you have any money in a retirement account, if you receive Social Security benefits, if you have a pension, a 401k, an IRA, or any savings connected in any way to the financial markets, what I am about to share with you touches every single part of your financial life directly. Fresh and serious worries about retirement market stability have just emerged following the latest developments from the Trump-Xi summit talks, and the response from financial markets, retirement experts, and economic analysts has been immediate and deeply concerning. Stick with me because I am going to walk you through exactly what happened at these talks, why the financial markets responded the way they did, what it means specifically for retirement accounts and fixed income seniors, and what practical steps you can take right now to protect the savings you have worked so hard to build. I am going to lay all of this out in plain, everyday language with no geopolitical jargon and no unnecessary panic, because what you need right now is honest, clear information, and that is exactly what we are here to deliver. If you are watching for the very first time, welcome. We cover these developments every single day so that seniors, retirees, and everyone living on a fixed income in the United States and Canada always has the clearest and most current picture of what is happening in Washington and around the world and how it directly affects your money. Make sure you stay all the way through today, because near the end, I am going to share something that most financial media outlets are completely missing about how geopolitical tensions between the United States and China affect retirees very differently than they affect younger investors, and why that distinction matters enormously for the decisions you make about your money right now. That is something every person in our community needs to understand clearly. So let us get into it right now, starting from the very beginning, so you have the complete picture. To understand why the Trump-Xi summit talks are generating such serious concern about retirement market stability, you need to understand what the relationship between the United States and China means for the global economy, and why that relationship sits at the very heart of the financial markets that your retirement savings are connected to. The United States and China are the two largest economies on the planet. Together, they account for a staggering share of global economic output, global trade flows, and global financial market activity. When the leaders of these two countries sit down together, the stakes could not be higher. Every word exchanged, every agreement reached or not reached, every signal sent about the future direction of this relationship sends immediate ripples through financial markets around the world. And those ripples land directly in your retirement account, whether you are watching the market or not. Let me tell you exactly what came out of the latest Trump-Xi summit talks and why it is generating the level of concern that is bringing so many people to us today asking for answers. The summit talks produced a mixed and in many ways ambiguous set of outcomes. On one hand, there were signals of potential progress on certain areas of trade and communication between the two countries. On the other hand, the fundamental tensions that have been building between the United States and China over trade policy, technology access, military posturing in the Pacific region, and economic competition remain very much unresolved. And it is that combination of surface-level diplomatic gestures alongside deep, unresolved tensions that is making markets nervous and making retirement experts concerned about what comes next. People are reaching out right now saying their retirement account balances have already moved noticeably in recent days, and they want to know whether they should be worried and whether they should be doing something different with their money. I want to address that directly and honestly right now before we go any further, because this is the question I know is on everyone's mind. If you are already fully retired and your income comes primarily from Social Security, a pension, or other fixed sources rather than from drawing down investment accounts, the day-to-day movements in the stock market affect you less directly than they affect someone who is still accumulating savings or who is heavily dependent on investment withdrawals for monthly income. That is an important distinction and one I want you to hold on to as we go through the rest of today's update. However, even for people whose monthly income is fully protected by Social Security and pension payments, the market volatility being generated by these geopolitical tensions creates real concerns in several important areas. Let me walk through each of those areas carefully so you have the complete picture. The first area of concern involves retirement account balances for people who still have savings invested in the market. Whether that is a 401k, a traditional IRA, a Roth IRA, or a brokerage account, the value of those accounts moves with the market. When the United States and China relationship deteriorates or sends uncertain signals, the sectors of the market most heavily exposed to that relationship tend to sell off quickly and sharply. Technology companies that rely on Chinese manufacturing or that sell significant products into the Chinese market. Agricultural companies that depend on Chinese purchases of American farm products. Consumer goods companies with supply chains deeply embedded in China. All of these see their stock values move sharply when US China tensions rise. And if your retirement account holds broad market index funds, which is extremely common among American retirement savers, you have exposure to all of these sectors whether you realize it or not. This is not a reason to panic, but it is a reason to be aware and to understand what you own and why it moves the way it does. I will keep you updated as market conditions develop in response to the ongoing Trump-Xi situation, and I will always put those market movements in context that makes sense for people at or near retirement age. Now, let me move to the second area of concern because this one is generating a great deal of anxiety among people in our community who may not be following the financial markets closely, but who feel the effects in a very different way. That area is inflation and the cost of living. And here is the connection that most mainstream financial reporting is not explaining clearly enough. The ongoing tensions between the United States and China have direct implications for the prices you pay at the grocery store, the pharmacy, and any retailer that sells goods with components manufactured in China. Right now, a very large percentage of the goods sold in American retail stores contain components or materials that come from China. Electronics, appliances, clothing, furniture, medical devices, prescription drug ingredients, and countless other everyday products all flow through supply chains that touch China at some point. When the relationship between the United States and China is stable and predictable, those supply chains run efficiently and prices stay relatively stable. When tensions rise and the threat of new tariffs or trade restrictions appears, those supply chains become disrupted and prices begin to move upward. For seniors on fixed incomes, especially those whose Social Security cost of living adjustment has not kept pace with the actual prices they are paying for essential goods, this supply chain inflation is a daily and very real financial pressure. You are not imagining it when your grocery bill feels higher than it should be based on your income. The connection between geopolitical tensions and the prices you pay at the register is real and direct, even if it is rarely explained that way. People are reaching out right now saying they feel like they cannot get ahead, no matter how carefully they budget. And I want you to know that this feeling is not a personal failure. It is a reflection of very real economic forces that are affecting millions of households exactly like yours. I am going to keep watching these price pressures and updating you as new information comes in about how the Trump-Xi relationship is affecting the cost of everyday goods. Now, let me move to the third area of concern because this one involves something that very few people are talking about right now and that I think deserves a great deal more attention from our community. That area involves the United States Treasury market and what happens to it when US China tensions escalate significantly. Here is some background that is essential to understanding this concern. China is one of the largest foreign holders of United States Treasury bonds. These are the bonds that the US government sells to finance its operations and its obligations, including the payment of Social Security benefits. For decades, this arrangement has worked relatively smoothly. China buys US treasuries. The US gets funding for its government operations, and both countries benefit from a stable financial relationship. But here is where the concern comes in. During periods of serious geopolitical tension between the two countries, there are fears in financial markets that China could choose to reduce its holdings of U.S. Treasury bonds as a form of economic leverage. If China were to sell a significant portion of its Treasury holdings, it would put upward pressure on U.S. interest rates because the government would need to offer higher yields to attract other buyers for those bonds. Higher interest rates on government debt create a cascade of effects throughout the entire economy. They raise borrowing costs for businesses and consumers, they put pressure on the federal budget, and they can create significant stress in financial markets that reverberates through retirement account values. Now, I want to be clear that this scenario, often called the nuclear option in financial discussions, is considered unlikely in the near term because it would also harm China economically. It is what economists call mutually assured financial destruction. But the fact that markets are even thinking about and pricing in the risk of this scenario during periods of elevated US China tension is itself significant, and it is part of why retirement market stability concerns are rising right now. The important takeaway for our community is that the financial relationship between the United States and China is deeply embedded in the foundations of the American economy, and any significant deterioration of that relationship creates real risks that flow all the way down to your retirement account and your monthly budget. I will keep you updated on every development in the Treasury market and the broader financial market response to the US China relationship going forward. Now, let me talk about something very practical because I know that understanding the risks is only half of what you need. You also need to know what you can actually do about it. The first and most important thing I want to say is this. For people who are already fully retired and living primarily on Social Security and pension income, the most important action is not to make dramatic changes to your financial life based on short-term market news. History shows very clearly that people who make dramatic financial decisions based on short-term geopolitical news often end up worse off than those who stay the course with a sound long-term strategy. If your monthly income is stable and your essential expenses are covered, the market volatility being generated by the Trump-Xi situation, while worth monitoring closely, does not necessarily require immediate action on your part. However, if you are in the group of people who are drawing down investment accounts to cover monthly expenses, or if you are within 5 years of beginning to draw on your retirement savings, the current environment does warrant a closer look at your strategy. Specifically, it is worth reviewing whether your asset allocation, meaning the mix of stocks, bonds, and other investments in your retirement account, is appropriate for your age, your income needs, and your tolerance for seeing account values fluctuate. A financial advisor or a nonprofit retirement counselor can help you think through this without cost if you qualify for assistance programs through your local area agency on aging or similar organizations. The second practical step involves staying informed about the specific goods and expenses in your budget that are most exposed to US China trade tensions. If you rely heavily on certain medications whose active ingredients come from China, for example, monitoring availability and pricing of those medications is genuinely important right now. Talk to your pharmacist. Ask whether there are therapeutically equivalent alternatives that might be less exposed to supply chain disruptions. This is a practical step that costs nothing and could protect you from a difficult situation down the road. I will keep you updated as supply chain developments related to the US China relationship affect the availability and pricing of essential goods for seniors. Now, let me take a moment to speak to our community members in Canada, because the Trump-Xi summit developments have very clear and direct implications for Canadian seniors as well. Canada's economy is deeply integrated with both the United States and China through trade, investment, and financial market connections. When the relationship between Washington and Beijing becomes turbulent, Canadian markets and Canadian supply chains feel it quickly. Canadian seniors who have retirement savings in market-connected accounts like registered retirement savings plans and tax-free savings accounts are exposed to many of the same market volatility risks we have been discussing today. And Canadian consumers are similarly exposed to supply chain price pressures from US-China trade tensions because many of the goods Canadians buy flow through the same global supply chains that serve the American market. I will continue to include relevant updates for our Canadian community members because retirement security and financial stability for older adults is a concern that truly knows no borders. Now, let me bring today's update to a close with a clear, honest, organized recap of everything we have covered, because I want every person watching to leave here today feeling genuinely informed and prepared rather than anxious and uncertain. The Trump Xi summit talks have produced mixed and ambiguous outcomes that are generating serious new concerns about retirement market stability across multiple dimensions simultaneously. For retirees with investment connected savings, the market volatility being generated by US China tensions is real and worth monitoring closely, though history counsels against making dramatic changes based on short term geopolitical news. For seniors on fixed incomes, the supply chain implications of US China tensions create real and immediate price pressures on everyday essential goods, including groceries, medications, and household products. The deeper structural concerns around Treasury markets and US China financial interdependence, while unlikely to produce immediate crisis, are worth understanding because they sit at the foundation of the financial system your retirement security depends upon. And the most practical steps you can take right now involve reviewing your asset allocation if you are drawing on investments, talking to your pharmacist about medication supply chains, and staying closely informed as this situation develops. I am going to be right here every single day, watching every summit development, every market movement, every supply chain signal, and every policy decision that affects your retirement security and your monthly financial life. When something important happens, you will hear it here. First explained in plain, clear, honest language that makes sense for real people living real lives and protecting real retirements. If today's update brought clarity to something that felt confusing or frightening, before please share it with someone in your life who needs to hear it. A family member, a neighbor, a fellow retiree at your community center, or your place of worship. There are millions of people in our community who are quietly worried about what is happening in the world and what it means for their financial security, and they just need someone to explain it clearly and honestly. This community exists because you deserve better than confusion and fear. You deserve clarity, honesty, and someone dedicated to watching out for your financial well being every single day without exception. And that is a commitment we will never stop honoring. Stay informed, stay steady, and I will be back very soon with the next important update. Take very good care of yourself and everyone you love.